Thank you very much. Dear ladies and gentlemen, it is really nice to be in this place. I haven't been here before. It's a pretty nice place to be, and it's the lucky ones who are here and not online, so you can see everything so beautiful here. And it is a really great pleasure, and where I'm standing here with a deep sense of purpose because it's really a meaningful place for the capital city of Lithuania and for the whole country as well. So this conference has brought us together to seek solutions on how to harness potential and enhance the efficiency of financial markets. Our presence here signifies a commitment to make a difference, and I'm confident that together we can achieve remarkable progress. Current geopolitical situation has further emphasized the importance of strengthening the EU strategic autonomy in the areas of economy, including finance. Capital markets are crucial to enable flow of finance into the real economy, where financing needs are massive to advance green and digital transitions, boost innovation, productivity, and competitiveness of the European economy, as well as finance the defense industry, which needs to turn on a higher gear. To achieve this, we need to reinforce our efforts to make capital markets more efficient and accessible for businesses to raise capital and for individuals to put saving into a productive use. The EU has been building its capital markets union for over a decade now. Despite significant progress on the CMU, the Capital Markets Union, much remains to be done to further develop the EU capital markets. The objectives of the CMU can still be achieved with strong collective commitment and the right policy choices. The European Parliament elections will be held in a week, and soon after we will have a new Commission. Now it's time to evaluate the work done already and outline the directions for the new political cycle. But first, let us set the scene why the CMU project is so important. The financial system, including the banking system and the capital markets, is crucial for supporting competitiveness that is key driver for the healthy economic growth. When we look at the European financial system, we see that it is largely dominated by banks, which account for 90% of household debt and 70% of businesses' debt. At the same time, the EU capital markets are far from their potential and remain fragmented along the national borders, particularly given that the pool of private savings in the EU is one of the largest in the world. Just in Lithuania, our households currently hold more than 22 billion euros in bank savings, 2/3 of which sit in not interest-bearing current accounts. We need better and more efficient capital markets to ensure that these savings are used to finance the EU economy. This was the rationale behind the Eurogroup's statement on the future of CMU that EU ministers of finance endorsed in March this year. We hope that the statement will be a good blueprint for the new Commission work agenda. And let me briefly mention a few points that I consider most important from that statement. First of all, the statement conveys a sense of urgency that the lack of CMU progress is a serious issue that is harmful for EU competitiveness and growth perspectives. We have been very clear that CMU must be at the top of the policy agenda for the next Commission. And we need decisive steps that would lead to a tangible impact on the real economy. The statement has a strong focus on reducing fragmentation to foster cross-border financial activities. It indicates the need for further supervisory convergence, as well as targeted convergence of national corporate insolvency frameworks, accounting framework, better integrated market infrastructure, harmonization of listing requirements across European exchanges. Indeed, the progress at the EU level is key to boost capital markets. However, there is always room for improvements at national or regional level, particularly given that the capital markets in different member states have different levels of development and therefore their needs vary. For this reason, it is vital to pay attention not only to big markets of the EU, but also to smaller capital markets. We are confident that future initiatives of the European Commission will strive at development of smaller capital markets. At the same time, having a bottom-up approach encompassing best practices sharing and national government initiatives guided by EU goals will be the key. So the government of Lithuania attaches great priority to developing Lithuanian capital markets, both at national level and at a regional level, and undertakes a number of measures to bring more activity into local market. An important milestone was the adoption of the capital market development guidelines, which were prepared in cooperation with the Bank of Lithuania. It sets out objectives for improving the legal and tax framework, increasing the supply of new financial products, further expanding the activities of the stock exchange, improving environment to financial intermediaries, and last but not least, enhancing the financial literacy. Our aim here is to incentivize the stable and competitive development of the Lithuanian capital market, to create alternative financing channels for businesses, particularly for small and medium enterprises, to provide additional investment opportunities for both individuals and institutional investors, and to improve the cooperation between institutions and market participants to respond to the market needs. We have already significant accomplishments that have been achieved with active engagement of many stakeholders, including market participants. Particular mention should be made on the Capital Markets Council, a coordination body established last year, which is composed both of industry and state institutions. The goal of this council is to set the main policy directions for the capital market development and coordinate the implementation of the recommendations of the guidelines. In line with the guidelines, I personally recently submitted a draft law on the establishment of an investment account to the Parliament and expect it to be approved next month. The proposal is based on the best practices and it is the most ambitious in the region. It aims to create a more convenient and supportive environment for the retail investors. The account will entail an attractive tax regime, except the income tax on returns as long as they are invested within the account. Also, sustainable finance is another topic that is really on top of our agenda, and Lithuania aims to take a regional leadership in this field. Last year, we have approved the ambitious action plan for the development of green finance, which aims to promote green finance in public and private sectors, ensure access to sustainability-related data, and develop public literacy in the field. As a key pillar of our plan, we have already established the Green Finance Institute, which is the first and so far the only one in the region. The aim of this institute is to advise businesses and institutions on sustainable finance issues and to perform analytical tasks, as well as to act as a think tank for this sector. Green Finance Institute functions are to create an ecosystem that would help mobilize both public and private funds for Lithuania's green transformation, and to coordinate cooperation between the public and private sectors and academia in green finance field. Moreover, the last but not least, the financial literacy is yet another element essential to the development of Lithuanian capital markets. Following the extensive consultation with various partners, that's why it took so long, the Ministry of Finance has recently approved the public financial education plan, paying particular attention to the challenges for consumers and retail investors arising from the rapid development and digitalization of the financial market. The plan sets out the priorities of financial education, which will contribute to the greater financial literacy of Lithuanian society. We will seek to raise the individual awareness of the risks and benefits of long-term savings and investments. Our aim is to provide people with sufficient knowledge to invest in capital markets and raise their awareness of financing opportunities in the capital markets. And also, plan places a strong emphasis on SMEs, which are looking for finances themselves, because there is not only the banking sector that could finance your business, but also the alternative banking, alternative financing, which is currently not the first choice for Lithuanian SMEs. And turning back to the regional development of the capital markets, because I touched the national level, European level, but we have also the regional component. I would like to highlight the initiative of creating a pan-Baltic capital market, which we see as a building block for the broader CMU agenda of the whole Europe Capital Markets Union. The efforts to integrate Baltic markets are aimed at combining the strengths of the Baltic countries and overcoming the constraints of the small markets, because we are the small market, thus leading to a greater availability of sources of funding for the businesses at a lower cost and providing more opportunities for investors. Up to now, important steps have been taken. We unified the regulatory system of covered bonds and the requirements for public securities offering in the three Baltic countries. Another important achievement is that now all three Baltic countries are rated as a single region in international indexes. Recently, the MSCI has established the new Baltics index. This is a very significant development in terms of increasing the attractiveness of the region to international investors. We are in constant three-country dialogue on potential next steps in harmonizing the application of regulations in other fields. Potential tracks for future works include, among others, institutional investors like pension funds and green finance. Finally, we have an important initiative underway, the establishment of the Baltic Capital Markets Development Accelerator Fund. The fund is intended to participate in initial public or private securities offerings, IPO or IBO, on the Nasdaq Baltic regulated market or Nasdaq Baltic First North alternative market. It would also invest in private pre-listing stage Baltic companies before IPO or IBO stage, which has a clear intention to be listed in the near future. The fund is expected to make its first investment early next year. The size of the fund is about 50 million euros. The one investment will be from the $500,000 to 5 million euros. The establishment of the fund would diversify and increase access to finance of SMEs, would allow institutional investors to participate in SME growth markets through the fund, and as well as would help to develop public capital market segment in Baltics. To conclude, I can assure you that we will continue a close dialogue with market participants to promote the development of national and regional capital markets, and will actively participate in building the CMU with our international partners. Having said that, let me wish all of us fruitful discussions at this conference. I think it will be very useful and interesting event. I'm sorry I cannot stay personally myself because it's a Parliament plenary session happening precisely now. I just run away and I'm speaking to you and then going back to push my button and to vote. So thank you very much for your attention. I wish you fruitful discussions and very interesting event today. Thank you.